how do you find the right location to be investing in? And I think you need to ask yourself, what type of investing are you doing? Are you doing short-term, medium-term, or long-term investing? And that's going to be somewhat of the basis of what you're looking at, because some of these markets aren't going to be the same for everything. This is Greg Cullen with Leverage Hustle, running our mentorship series, here again with Dennis. Dennis, I feel like it's been a week since I last spoke with you. I feel like you've been soaking up knowledge. Really excited to jump into today's conversation. How you doing?
Likewise, Greg. Doing well. Another day, just trying to learn, get 1% better each day.
Yep.
So
I know
we're here.
It's end of quarter for you. Life is pretty hectic right now. So hopefully you close some of these big deals and get some of those nice commission checks too.
Absolutely. And throw them at some properties.
For sure. I think your first question was, how do you find the right location to be investing in? And I think you need to ask yourself, what type of investing are you doing? Are you doing short-term, medium-term, or long-term investing? And that's going to be somewhat of the basis of what you're looking at, because some of these markets aren't going to be the same for everything. So I'll base it off of a long-term investment, what you're looking at. For long-term investments, what I'm looking for is really from the census information. See what areas are growing pretty consistently. Ideally, if I'm looking at the city center, it could be something like a Miami, Orlando, Atlanta, Austin, Texas. If you can invest 30 to 45 minutes outside of that, you're still going to get a lot of that great growth that comes from downtown with some of the folks who are trying to move to an affordable area too. So having that census information is super helpful. It's also important to realize what type of commercial development is going on in the area too.
Awesome. No, that's really good to know. And then you had mentioned AirDNA. So I'd heard about that and using it as kind of a, just if you're thinking about like a short-term or mid-term rental strategy, thinking about or kind of comparing, what other people are renting for in the market. Have you seen that to be accurate? So like if you were to take Fort Lauderdale, for instance, around like the Los Olas area, thinking about a short-term rental. I think that's one of the higher growth areas and a little bit cheaper than, say Miami. Have you seen and I know that you do have the property in Maui, so I'm assuming you've looked at, AirDNA over there. Have you found that to be pretty accurate in terms of what you can expect for rent, or is it, a little bit off?
AirDNA can be pretty reliable. I'd give it a small margin of error of probably 10 or 15%. It's not going to be 100% accurate, but it's going to give you a lot of really good information that you can figure out, does this make sense for my strategy? And Airbnbs have their own strategies and potential problems too. So you just need to figure out what's worth the squeeze for you at the end of the day.
Definitely. Okay. Well, kind of like we talked about, more long-term, less risk and less maintenance. So,
Sure.
That being said, I know that you specialize more in the BRRRR strategy and long-term investing. So maybe we could dive a little bit deeper into that and maybe take a look at some properties.
For sure. Yeah, let's do that. You want to jump into the property analysis now?
Let's do it.
Okay.
That'd be great.
So let's look at a couple different properties here. You have a townhome for $350, 3-bed, 2-bath. Interesting furniture, but that's not really your problem.
I don't know. That might be my style.
It might be your style. All right, so let's see. So that's $350. 350. Now your home insurance will probably be a little bit more, so just call that $1,500 here. I think we saw that with a $200 HOA fee. Now the good news about this is it's a 3-bedroom. It's still a small space, like it's 940 square feet, but it's still 3 bedrooms. And so that's gonna be a good amount of people looking for something like this.
Should get you close to that 1% rule on that property.
You're getting pretty damn close to it. Now let me just do one more of these. I think this might show that you found a good one.
I think you found it, but I'll take it.
Hey, you know what? That's okay. I'll let you take that one. Sweetwater. There it is. Okay. Now let's just say we're gonna do 3,300. We're looking at 3-bed. Oh, my free search limit has expired. I'm not paying for this.
No,
I'm not paying for this. But you see here, like I didn't put any other factors on this. I didn't say like if it's a condo, apartment, house, I didn't say townhome. I literally just put if it's up to 1,000 square feet. And what you see here is like they're charging $1,100 a bedroom. They're charging $1,200 a bedroom. These folks are charging, $1,200 a room, more or less. These folks at $1,200 a room. So with that, very bad math, but like there's also no supply in this area too, it looks like. But with that, they're looking at $3,600. Oh man, this gets good now. $3,600 minus, just round that up to $2,700. That gets you $900 cash flow a month times 12. That gets you close to 11,000 passive income, like a year, which is nice. Now you're putting 70,000 into this property. You might pay, probably another 7,000 closing costs. That's 77, and maybe just round it up to 80, just for like miscellaneous, like you might need to paint the house or something. You're gonna like this. So that right there, we've successfully run a good deal analysis where you hit a double. We're finding something that's above a 10% cash on cash return. You're finding something that's in generally good condition. Now, I don't know anything about the area, neither do you. We don't know anything about crime. We don't know about development. We don't know who's moving there. We don't know about just commercial development in general. So there's a lot of unknowns, but the numbers generally make sense.
Great. No, I feel pretty comfortable now, kind of understanding the flow. I appreciate you walking through that. That's incredibly helpful. And I'm going to start running my own deal analysis now. And probably the analysis paralysis will make me run something like 100 or so.
Yeah.
But I'll figure it out and learn a little bit more about the areas. Avoid Hialeah.
Yep.
And find some other areas. Maybe it's Sweetwater.
Maybe. I think your best bet as you look at moving forward until the next time that I chat with you and Val is just kind of do 1 or 3 of these deal analyses a day. Start really flexing those muscles and look 30, 45 minutes outside city centers. You will generally find interesting deals, just like this one in Sweetwater. We would have never came across it. So now that you found this property in Sweetwater, now take it a step further and figure out like, hey, does this make sense? How does this area look? What's crime like? What's population, commercial development, whatever. I think that's the next logical step for you. And then when we connect next, whether it's in a week or 2, whatever it's going to be, we can start diving into that a little bit more, and we can do a little bit of validation on that too.
I love it. Yeah, validation will be great. That'll really set the analysis paralysis to bed. So,
cool.
Greg, thank you so much. This is incredible as always, and appreciate you sharing your knowledge with me.
My pleasure, buddy. See ya.